So, ladies and gentlemen, it's my absolute pleasure to introduce to you and welcome Mr. Michael Wilshire, Head of Renewables at Bloomberg New Energy Finance, for our fourth and final keynote of the keynote presentation of the day. Michael leads the global team of analysts at Bloomberg New Energy Finance, who provide economic, financial, and technology research into renewables, gas, and energy smart technologies. Before that, he was a partner at McKinsey, where he consulted across a range of industries, including energy, technology, and telecommunications. He worked with equipment providers and operators across Europe, as well as in Asia and the US. Previously, Michael worked in the UK Department of Energy in the 1980s across a variety of energy policy areas, including one of the very earliest privatizations, the Emerson International, as well as deregulation of the gas industry, renewable energy, nuclear policy, and the financing and privatization of the electricity industry. During that period, he was also the private secretary to both the Minister of State for Energy and the Permanent Secretary. So please join me in welcoming Mr. Wilshire.
Thank you very much. I was also an alumnus of LBS, so it's always a pleasure to be back here. I'm going to talk about some of the global trends in clean energy for the next 35 minutes or so. If I can just advance this. Just to let you know a little bit more about BNEF, for Bloomberg New Energy Finance. We have roughly 200 people. We're part of Bloomberg, which is obviously a very large organization indeed, of about 17,000 people. Our team is about 200 people, and we cover not only the renewable sectors, such as solar, wind, and other renewables, but also gas, because that's obviously having an enormous impact on the clean energy sector. And what we term energy smart technologies, which is kind of the smart grid related technologies, home energy management, and so on. And we also have a team that focuses as well and separately on advanced transport, which is related both to EVs, but also other forms of fuel substitution, such as biofuels. And then last but not least, we have a team that works on carbon and REC and other related trading markets. We're very global in nature, so our analysts, for example, which I lead, are spread out literally across the globe. So that's us. Just in terms of what I wanted to cover, give you and I'll canter through it quite rapidly, a sense of what's going on in the global investment markets and the landscape. So I'll show you lots of numbers about what's been invested and some of the examples. I then want to talk a little bit about changes, what's changing the energy system, and it'll actually touch on some of the points that have already come up, because we think there are some fundamental changes to clean energy as compared with the last five or 10 years. And finally, what's the future outlook and implications from that? So first of all, on the numbers, just to give you a sense of how fast the sector's been growing. By 2013, we are a $250 billion industry in terms of total investment into the sector. And this is net new investment into the sector. On top of these numbers, we would add transactions such as M&A and so on. That's not included in this particular set of numbers. So this is flows of money into the sector, mainly into renewables, but also other things as well. You'll notice towards the end of the chart, although it had been growing very rapidly by about 30% compound annual growth rate up to 2011, it fell somewhat in 2012, 2013. That was partly because a lot of policy support, in particular support that was introduced after the financial crisis for clean energy specifically, tailed off. But also, actually, the cost of clean energy is coming down. So part of this is actually per dollar, you're getting better value for your money. In dollar terms, we're expecting, as I think my colleague Seb mentioned earlier, something of an uptick in 2014. So we're not expecting this downward trend to continue into this year. Just showing you what that looks like in terms of installations. As you see, it's a much more level effect between 2000 and 2013. So this is taking the dollar numbers and turning them into gigawatts. Actually, it should be gigawatts of capacity. And we are expecting the capacity to continue to rise in 2014, 15 and beyond. And that's based on a lot of visibility, actually, we've got at a project level. We have, as part of our team, people who track investment activities, so we know what's in the pipeline at each stage of development, which gives us a very good degree of visibility, at least for the next 2 or 3 years. And we do obviously longer term projections beyond that. So in gigawatts, the trend is still very, very much upwards. When you look at it, regionally, it's more of a mixed picture. Because Europe was in the vanguard of clean energy as one of the earlier drivers of it in terms of countries. But we've seen a very rapid falling off of investment in Europe. And a lot of that has to do with cutbacks and a reduction in policy support. But also there were retroactive, it came up earlier, but retroactive reductions to support. In other words, people went back in history and you thought you got a good contract and discovered you hadn't because the government changed the rules. So the effect of that retroactive investment was not actually just on those countries, but I think it created a broader climate of uncertainty. So that's Europe. North America, it's been more stop-go because the policy tends to be things like the production tax credit. No one quite knows until it's renewed whether or not it's going to be renewed. So you tend to get a little bit stop-go policy in that, and that's reflected in the volatility of those numbers. The standout and continuous growth is in Asia, and quite a bit of this is China. But it's not exclusively China. We're seeing strong growth in Japan and indeed right across the region, country by country. But China, collectively, I think is investing something like half the total in clean energy globally at the moment. And by the way, the story there has changed from being just wind investment to a combination of wind and solar. Middle East and Africa, small at the moment, although they do have very large plans, and Central and South America, we're still seeing quite a lot of wind development in those markets. So that's the regional trend. In terms of investment by sector, when I started doing this particular role, we were back in sort of late 2008, 2009. And at the time, solar, which is the yellow-coloured area of this chart, and this is simply a similar set of numbers but broken down quarterly, which is why you've got more bars on the chart. The solar area, which is yellow, was about 20-25% of the total. Now solar accounts for roughly 60 to 70% of the total clean energy investment globally. So that is a big change, and it has an enormous amount to do, as I'll show shortly, in terms of the cost competitiveness and the pace at which the costs of solar have come down. This is not just a change in terms of sector mix, it's also a change in terms of the nature of the network, because a high proportion of this solar, some of it is utility grade solar in the sense that it's built in large quantities in solar farms, but a lot of it is distributed solar. So we're actually moving from a network, if you like, that's much more centralized to one that's much more decentralized in terms of how it operates. You can see that this is breaking down the same set of numbers, but looking by asset class. So the purple area here at the bottom is asset finance. So the industry as a whole is very heavily dependent on project finance. So there's still a lot of either balance sheet financing by utilities or project finance supported by banks or other institutions putting money in. The yellow area is small distributed capacity, which again is primarily solar, but there's also a small amount of other distributed capacity at the edge of the network as well. So again, this is a real structural change in terms of the mix of what's going into investment, from centralized investment, if you go back in time, even within clean energy, to a much more decentralized structure. And that's got major implications, actually, as we think about it, for what the structure of the industry might look like in future. I'll run through some of the other numbers quickly. This is on a different scale, so these numbers are a lot smaller, but VC and PE activity is obviously very important and has held up, despite the fluctuations in investment over the last few years, reasonably well, although it did tail off. It's recovered somewhat in 2014. And we still see a lot of interest in energy smart technologies, smart grid, home energy management, storage, by the way, we would include within that category. That's the green area at the bottom. And even the mature areas like solar, we're still seeing venture capital money go into those in terms of early stage investment. Some of that is into companies that are exploiting solar, but some of it's actually into technology companies as well. So I wouldn't view this by any if you take solar and, if, for that matter, wind, I don't think it's a mature sector yet in terms of technology. Just a few quick examples of what happened in the last quarter, and this obviously varies quarter by quarter, so it's very much a snapshot. Zumina Energia is a Mexican wind developer. Lattice Power, probably actually almost as important as solar, is what happens in lighting, because lighting is roughly 10% of electricity consumption, and the impact of LEDs, if deployed widely, could have an enormous impact on total electricity demand. So Lattice Power actually is another example of early-ish stage company, and they're using silicon as a substrate. Normally you use sapphire, but you get fewer strains and potentially longer lifetimes if you use silicon. GlassPoint Solar, they're doing solar thermal to steam, so stuff that you would deploy near actually oil wells to pump the stuff out. Renovate America is actually doing energy efficiency, so it's a financing platform for that. And the last company is actually a solar manufacturing company with some degree of innovation in its technologies. It's a relatively late stage VC. So that just gives you a quick flavour. Public markets, we do see the public markets in terms of IPOs and so on, clearly very volatile. So there's a big peak in 2007. I think that was Iberdrola IPOing. Actually, we've seen it tail off in 2012, 2013, but we're seeing more activity in the public market. So they were a bit closed in 2013, relatively speaking, for clean energy. That started to thaw a bit in terms of exits and opportunities to raise capital. And last but not least, in terms of the investment flows, we term this funds in circulation. So at the beginning, I caveated my $250 billion, or the $250 billion, by saying it was just net new investment into the sector. On top of that, there's also M&A activity and assets changing hands after they've been built in terms of flows of finance. It's not net new money, but it's refinancing of one form or another. And this is actually quite a large category, and we expect it to grow into the future. And the reasons for that, I think, are primarily that the owners of many of the original assets and the initial developers of clean energy assets are not necessarily the natural long-term owners. And someone raised it earlier, actually, that if you're looking at a wind farm, it's got a lot of the characteristics in terms of the cash flow it produces to a bond. So we're seeing a lot of interest from institutions and others in how could you invest in this as an asset class, maybe decoupling ownership of the financial ownership of the asset from the operational responsibility to run that asset, which a pension fund probably doesn't want to do, so to probably get someone to help them with that. But institutional capital, I think, is going to be a very important flow into the sector. And indeed, if clean energy is to grow, and we do expect it to grow, but if it is to grow, this institutional flow of capital will be very important. Just to give you a sense of that, some of the transactions in the last quarter, I won't go through them all, but NRG Yield is an example of these yield cos. They're a little bit like REITs, if any of you are familiar with the property market, where you put things in a vehicle and then there's some tax advantages provided you distribute the profits from it. So there was an acquisition there. Another one I'd highlight actually is the third one down because of the acquirers. There are a number of pension funds involved in that. That was a wind farm acquisition offshore. So once these assets have been built, or even actually in some cases before they're built, we're seeing the institutions start to invest money into them. And I guess the last one is quite interesting because it's an Irish acquirer, a mainstream renewable power, but extending its franchise into other markets. So, I think the theme is the sector's changing in terms of ownership. We're seeing new owners come in, and we're seeing expansion and consolidation. I think consolidation, by the way, of clean energy assets will be another important part of this cycle. Just in terms of the returns that you would have made on stocks had you invested, we're not allowed to give investment advice, by the way, so this is just numbers that have happened. We do have, however, a basket of clean energy stocks called the NEX, which actually developed an index that we developed and is tracked on the stock exchanges. That's the red line, and you can see how that shot up in 2008 to very high levels. Again, it had grown by, I think, 30% a year. We did say at the time that we expected that to come down. When it came down, it wasn't quite for the reasons we expected, which was the financial crash. We then saw a lot of up and downs, but actually it's recovered tolerably well since 2013. So, if you've been looking at this, and the industry was looking at this in a much more depressed mood, I think in early 2013, we've seen, at least in terms of these numbers, the perception of clean energy stocks improving. So hopefully that's given you a sort of quick run through the numbers, just to say, it has been a little bit roller coaster over the last couple of years following a period of very strong and steady growth. But we are seeing that growth, and we do expect that growth to continue at least into the medium term. Now, I want to give you some examples of why we believe that's true, because one thing we're, institutionally, we're very keen that we analyse things objectively, and we're not here to be cheerleaders for the clean energy industry. This is what we believe based on our analysis. So in terms of the drivers for the energy system, I just wanted to focus in particular on solar. And this is a couple of curves. The bottom one is the cumulative installation of solar globally going back to 1990. So it's just looking at how much solar has been installed globally since very low levels in 1990. The upper curve is the logarithmic, the log of that lower curve. And you can see the bottom curve looks roughly sort of exponential shaped. People use the word exponential very loosely to describe lots of things, many of which are not exponential. But you can see it might be an exponential curve. And for the mathematicians amongst you, I'm one of them, you'll know that if you take the log of a graph and it's a straight line, then it's exponential. Actually, if anything, this is slightly upward sloping. So I've called it hyper-exponential, which is probably stretching it a little bit. But it's more than linear when viewed on a log scale. So this is something that's growing very rapidly indeed, and reaching roughly 2.5% of total installed capacity. By the way, the capacity factor on solar is lower than a lot of other things. So in terms of generation, it's even lower than 2.5%. And you might think that's not much. But of course, when things grow exponentially, and as someone pointed out earlier, my background is also in telecoms, and I saw the growth of industries like semiconductors and mobile. When you think of things exponentially, they creep up on you, and they creep up on you very fast, because 1% becomes 2%, becomes 7%, becomes 10%, and so on very, very quickly. Now, I'm not saying solar is going to continue to grow exponentially forever, because, as been pointed out, there are some limitations on that in terms of the system, but I do think we're dealing with a technology that is fundamentally different from most of the technologies we've seen in the energy sector before, and that's what's driving this. Another way of looking at it, we do a lot of analysis around experience curves. So again, these are log lines on both axes now, and the bottom one is looking at cumulative installation of solar, and the top is looking at cost per watt. And the learning curve effect should be a straight line of its exponential growth. It is roughly, although you do see fluctuations around it. Sorry, the top one is for crystalline silicon solar, and the bottom one is for thin film, which is another version of solar technology. The costs, a simple way of looking at this is every time the world's cumulative volumes of solar installations have doubled to date, costs have come down by just under 25%. That is an aggressive rate of cost decline because the volumes have doubled and keep on doubling. And they can, I believe, still double for a few times yet. So that's the experience curve, and I'll show you some more examples of other technologies in just a moment. Another way of sort of turning it the other way around is to say, well, how much value do I get for solar? This is looking at it on a time basis this time rather than cumulative installations. And if you go back through the history of solar, the panels on the left, I think actually might be even before 1975, but they were relatively spread out. It was primitive technology. Then you move to round cells within the solar panel, if that's visible, or sort of oval-shaped, through to the solar panels that we see today, which are engineered, where the costs are engineered right down. So solar has evolved significantly as a technology. And you can see that in terms of the numbers. You've had this exponential progression in terms of the rate at which solar has been coming down each year. In fact, it's been about 30% a year. The semiconductor industry, in terms of value, and there we measure it normally in terms of processing power per dollar invested. That would be more like 60% a year. So you could think of this as a little bit like the semiconductor industry, but it probably takes about twice as long for anything to happen. But the semiconductor industry, as we all know, has been extraordinary. Why am I going on about this? Well, this is something that's persisted in solar across several decades. It's underlying a sharp shift from centralized to decentralized generation. It's going to create a lot of new business models, as the previous speaker pointed out, in terms of auto consumption, particularly if you combine it with storage. And it presents huge challenges, as well as, I believe, as opportunities for today's utilities, but also new entrants to the sector. Just to give you a sense of how long this sort of technology progression can go on for, because often people say, well, this is an S-curve effect, and soon you reach the top of the S, and nothing else happens. Well, taking semiconductors as an example, and doing exactly the same kind of analysis, you find actually that sort of progression has happened not just in terms of the integrated circuits we see today in today's mobile phones, but actually it goes back to the tabulator, which was an electromechanical device, through to relays, through to vacuum tubes, through to transistors, into first-generation integrated circuits, and so on. So the point is, in technology, it rarely stops. And these trends are persistent. And in the case of semiconductors, it's had fundamental effects. We've moved from centralized mainframes to decentralized devices in your pocket. It's clearly had a huge impact on reshaping industries, as we've all seen, as processing power has become, in this case, almost free. And those who survived, many of the companies that built the devices on the left of this chart and the early computers are no longer in existence. So radical business models changes and rethinks have been necessary for survival. Of course, with solar, it's not just the cost of the module. Very important is the whole system cost. So here we've looked at different countries. The China line is the one at the bottom. But Germany is the next one up. And you can see there's an enormous difference in system costs between different countries. So that's very important because there's a long way to go, I think, in terms of improving the rest of the solar value chain, installation, making processes more efficient, introducing better inverters, better racking systems, more modularity. And there's a long way to go between best practice and less good practice. I should say some of this is because margins that the developers capture, these are prices, so margins that the developers capture are different around the world, and those are being competed down as well. But I think also there's an enormous amount to be gained through best practice too. Now, in terms of a way to look at this, and we call this sort of grid parity, probably a more accurate description is socket parity. So if you're I'll explain the chart in a moment because it's a bit busy. If you're thinking about whether to install solar on your roof, there are kind of two decisions that you might think about, or two parameters. One is how sunny is it, which is what is on the x-axis, so how much radiation, sunlight is there falling on your solar panels. And the vertical axis is what is the electricity price that you're competing against? How much are you as a consumer paying for your electricity? So basically, if it's sunnier and or it's the electricity price is already very expensive, you're more likely to deploy solar. That's the sort of thesis. The levelized cost of energy is the kind of indifference curve between those. So if you're above the curve, then all other things being equal, you would install solar. Now, I should say this ignores system effects. It assumes that you can do net metering. And so it is an oversimplification in that sense, but it's simply to illustrate how far costs are falling. And this, by the way, curve is the right decision in many parts of the world today because net metering does apply, although I think it will disappear over time or dissipate over time. By the way, these numbers do not include subsidies, so this is completely free of subsidies. If you're getting subsidies, it will shift you higher than this curve would suggest. So you can see there are already in 2014 a number of countries where it would make sense to deploy solar on that basis, even without subsidies. If you move forward to 2020, the curve shifts down to the point where most countries around the globe would be above the curve. So that's a result of this very rapid decline in the cost of solar. It's just going to get a lot cheaper. and it's going to be relevant to more places. I will come on to storage, not in the same detail as previously, but I think it's very important that you look at this as part of the system, not this being solar, not the whole answer. So that's what's happening in terms of residential grid parity. In terms of funds being closed, a lot of funds are coming into the market and chasing solar or building up funds to deploy into solar installations in particular. And some of this is for commercial solar on rooftops, some of it's for residential solar. So lots of business models, lots of different financing mechanisms being tried. I should say it's not just solar. We do see these technology trends as well in wind and in other areas. So in the case of wind, there have been actually radical improvements in the cost of wind because of better hub heights. Blades are getting longer. You can actually build blades in a modular fashion as well. Improved component parts, more reliability. Siting. Siting was relatively unsophisticated early on. It's got a lot more sophisticated now with optimization. You can control the turbines better and so on. So that's led to higher capacity factors, lower running costs, and a reduction in the levelized cost of energy as a result. In the case of solar, I said every time the volume doubles, costs come down by just under 25%, 24%. In the case of wind, it's 14% for each doubling of cumulative volume to date. So it hasn't got quite the same technology characteristics as solar. We're not talking about silicon here. We are talking about relatively heavy and large pieces of kit. And obviously getting costs down in that is more complicated. Complicated is probably the wrong word, but it's different, and you can't necessarily get the same scaling effects. But it's still substantial. And a large part of this, by the way, comes from improvements in the capacity factor. So this is why we measured this particular analysis in megawatt hours rather than megawatts of capacity. Storage is very important, as the previous speaker pointed out. And here we've done the same sort of learning curve analysis for what's gone on in lithium-ion batteries. So the lower line is showing, and again, just to remind us, the x-axis, the horizontal axis, is total cumulative installed volumes on a log basis, and the vertical axis is the cost per kilowatt hour of storage. In terms of what's happened in consumer lithium-ion batteries, which is the lower line, you can see how that's followed an experience curve effect. So the batteries that go into your mobile phone have followed that kind of experience curve. And we've done a similar sort of analysis and then plotted prices. And we run an index, by the way, with manufacturers and others to get those prices. To see where we are. And broadly, we're roughly on track. In fact, actually, we're probably doing we're a little bit below what our experience curve would suggest, partly because there's been quite a lot of supply of lithium-ion capacity recently into the market. I should say, you get fluctuations around all these experience curves, and they're usually to do with short-run supply-demand effects. But the learning curve effect is, if you like, the long-term trend. We did that analysis, and then, of course, Tesla came along and said, well, we're going to build a gigafactory, which roughly doubles the amount of cumulative volume in the world to date once it's built. So that is a major step along the experience curve for storage. And as we've just seen, that could have a lot of impact on PV and storage combinations, community storage, storage in the home, and so on. So I think lithium-ion, partly because of the scale effects and partly because that's being driven by EVs, is a very important area to watch. We track, by the way, all the other storage technologies. I think this illustrates that, actually, because this is just showing you some numbers on VC activity. So there's a lot of money that has gone and is going into storage. And it's not just lithium-ion, it's a range of different technologies, vanadium redox, compressed air, zinc bromide, and many others. And I think actually we counted, just in terms of cathode companies in China at one point, we found 60 companies making cathodes. So there's a huge amount of innovation going on in the storage area. That's very important as you start to think not just about electric vehicles, which it's fundamental to, by the way, because the biggest part of the cost of an electric vehicle is the cost of storage. But it's also fundamental to what goes on in terms of storage as a balancing item for intermittent sources of generation, as we've just heard. So that's hopefully sort of providing a little bit of colour around some of the drivers. So just to summarise solar coming down very fast, other forms of clean energy also coming down. And the theme is really clean energy is becoming much more cost competitive, and I think will become even more cost competitive as the volumes ramp up. And I do think actually one thing with solar is to think about not just when will solar reach grid parity in a particular country, but just how far will the cost of solar, at least at the point at which it's generated, cost. Will it be a third of grid parity or half of grid parity? I don't think it's going to stop at grid parity. I think it's going to go below it, and that's going to cause a lot of changes to the system. So in the last few minutes, I just wanted to summarize some of those in terms of, what does this mean for industry participants and what's the kind of outlook and implications for them. So as I sort of alluded to at the beginning, we do think this is quite a major set of changes that are triggering a lot of change in the electricity system. In terms of infrastructure, we're moving from something that's essentially highly centralized to something that's not completely decentralized, but more distributed than it has been. There's the potential for storage in customer premises, in the home, and also at the local distribution network point, as well as potentially back in the network, although, as we saw, the cost of that could be a lot higher. We're seeing rapid cost falls or declines in cost in terms of the technology. I haven't covered it much in this presentation, but I think the application of communications and control and semiconductor technologies in the home and in the workplace is going to be fundamental in terms of managing demand. We may hear a little bit about that from the next panel. So this theme of the connected home, the Internet of Things, so-called, and distributed intelligence, I think is going to have a lot of effect on the industry. Regulation I characterize as somewhat uncertain, but increased competition is likely, and I think regulators may seize on some of this to inject more competition into the energy markets than may exist today. The service propositions, I think, will revolve not just around cheaper energy, but also things like increased control, comfort, and convenience. So if you think about the consumer, when I worked in telecoms, new entrants came in and competed with the incumbents and offered the same price minus 10%, and it basically didn't work. And the reason is, it sounds good, but people don't sign up for it. There's a lot of inertia. But if you offer them something else like broadband or something else like control and comfort in your home as well as energy, it's a different proposition. So I think we'll see a lot of interest around what those propositions should be. The pricing and economics, clean energy may look more expensive today, but the costs are coming down and coming down very rapidly to the point where both actually solar and wind are fully cost competitive in many places. And the business models, I think, will see much more bundling of services and more competition for broad customer relationships. So there's this awful phrase about who will own the customer, which I think is awful because customers don't want to be owned. But I think utilities and other players who can engage with customers and offer them a set of services that integrate and make sense to the customer will be in the best position as to those relative to those who regard it just as a commodity and sell that. And we're seeing some examples of those today. So that creates a whole set of opportunities. I've just outlined some of them here. And, if you were a utility, you might think of this as an enormous threat, and it is a potential threat. But you might think, well, where can I play in this? And certainly if you're a new entrant, you might think, where can I play in this? So, distributed generation, whether you're a developer or a financier, opens up a whole set of opportunities. For utilities, actually, I think in terms of providing support services to some of those new entrants, that's an opportunity because they don't all have customer support and billing systems. Storage services, we've already heard quite a lot about that, but that's another area. Demand management, I think we're going to hear a little bit about that in a moment. So reducing demand, you've seen all over the underground at the moment the adverts for various forms of home energy management devices. So devices not just in the home, actually, but also in commercial environments as well. So both demand management and this so-called connected home. The interesting thing, I think, by the way, about the connected home is we think of it in the energy sector, or tend to, as energy management or home energy management. I'm sure that players like Apple and Google do not think of it as energy management. They think of it as the connected home, because that's what the consumer wants. So of which energy is just a subset. So, one thing as part of this and thinking about the business models is what's relevant to the consumer. And it may not just be energy that the consumer cares about. And finally, I think there's, in a distributed world, there are opportunities, for example, in microgrids, and we see players who are acting as systems integrators or operators at the microgrid level in a more distributed environment. So there is a lot of opportunity within this. So finally, just some thoughts to sum up. In terms of implications, technologies, and the ones I single out in particular would be PV, because of that very steep cost curve effect, storage, and distributed intelligence, by which I mean smart devices interconnected in the home, offering a range of services, including energy. All of those are going to have quite a big impact on the electricity system and industry. And those who prosper are the ones who are going to take advantage of combinations of that. The network architecture, I come from a telecoms background as well, so that moved from a very decentralized world to the internet, which is kind of the ultimate decentralized network. But I think there are some parallels in a sense that we're moving from a network that's more centralized to one that's more distributed, so that's going to create more opportunities, including at the edge of the network rather than just in the center of it. Regulation, uncertain, but more competition. And it came up earlier, actually. I think whilst we're probably not going to move to a full, fixed price model in the way in which we have moved in many areas of telecoms, because, most of us probably have flattish rates for things like our mobile or broadband packages. I think we'll see more of a separation between fixed and variable costs to reflect some of the underlying structure of the service. But there was a very good point made earlier about, we need something that incentivizes people to save energy as well. And finally, I've said it earlier, but just to sum up, service provision and building those broad and integrated sets of relationships with customers and improving the customer's overall experience, I think, are going to be critical in this new world. So thank you very much.
Hi. What do you think is the impact of the drop in oil prices recently on the clean energy sector?
It's a very good question. The effect of oil prices, it's not, you could say the effect of the oil price itself is not very closely coupled with clean energy, because there is in parts of the world oil-fired generation, but in many parts of the world we're not primarily reliant on oil-fired generation, but we are reliant on gas-fired generation. So I think gas is probably the main connection point, although in some markets where there's a lot of oil-fired generation, it will make a difference. Gas is kind of a mixed picture because in some parts of the world it may affect the marginal economics of some fields, for example, where oil and gas are being produced. So paradoxically, it could actually make gas more expensive because you might have less gas produced as a result. In other parts of the world, such as Europe, where you've still got some linkage between supply contracts and the oil price, it could go the other way. So it's hard to say. I would say generally, if you're coming in with something that's more technology-based and competing against something that doesn't require fuel, and competing against something that does require fuel, it's probably a disadvantage if you're, relatively speaking, your competitors' price, as it were, comes down. But I'm not sure the effect, at least in the short to medium term, is going to be that marked on clean energy. I think certainly in terms of electricity generation, I think I would be surprised if it had a big impact on what we've just outlined.
What's your expectation for a combined share of wind and solar in the global primary energy consumption in, say, 20 years, by 2035?
Yes, I talked much more about solar than I did about wind. I think both will be relevant, and they will coexist. I think there will be more solar than wind overall, because I think the cost of solar will come down to a point where it is actually more cost competitive than wind. I think wind has reached cost competitiveness in many places, but it's still got a way to go in some areas, particularly in offshore wind. So I think we will still see wind deployed. I think it's partly because, as came up earlier, you need a mix of technologies, partly because of system balancing, and partly just in terms of diversity and security of supplies. So I'd expect more solar, but I don't expect wind to go away. I think you'll see a balance. And actually, it's interesting, in China, for example, although China makes most of the world's, or many of the world's solar modules and solar panels. Until recently, there was very little investment in China in terms of deployment of solar, but there was an awful lot of wind. Wind was half the world's installations for many years. And we've now seen a ramp up of solar. So in a sense, it's sort of gone the other way round. You start off with a lot of wind, and they built up solar. But I think there's also a reason for that it's partly to take advantage of the manufacturing base that they've got in solar and find outlets for some of that supply. But also having a balance of solar and wind on the system is generally a good thing. But more solar than wind, I would say.
Okay, thank you, Mr. Wilshire, for engaging in a great presentation.